You are Bhatt joins us, Managing Director with Dalton Capital Advisors. Morning, Mr. Bhatt. Thank you for joining us. Mr. Bhatt, what do you want to start with? Strength in consumer names, weakness in IT names, or uncertainty in banking names?
Well, all of them you hit the nail on the head. That is where we stand today. I think generally the view is continuing to be cautious, largely because of the fact that we still have no certainty about how FIIs will take to the rules that are going to be framed on GAR. That is a very important issue. Of course, some fillip was given to the market by the 50 basis point cut in repo rates by the Reserve Bank of India, rather unexpectedly. And so therefore that is sort of going to wear thin, because despite that cut, we really have not seen commensurate action on the yield on 10-year bonds, largely because of the fact that the supply of securities is going to be quite robust. So while the demand-supply mismatch continues in terms of the ability of the 10-year bond to trend towards lower yields, despite this 50 basis point cut in repo rates, so that is something that the market did not expect, and unless it is sort of corroborated by sort of moderating supply of securities, I don't think this is really going to yield huge results in terms of lower lending rates by banks. So therefore, on the whole, time to be cautious and time to watch which way the government is going to go in terms of implementing decisions regarding, say, resources, regarding power sector reforms, and regarding telecom sector. All these are sort of business to be done on the table. So I think unless there is some movement there, unless there is some movement on certainty about tax provisions as far as foreign investments are concerned, I don't see the market really running ahead dramatically.
Mr. Bhatt, after what we've seen from Infosys as well as HCL Technologies, do you think there could be another rejig in the pecking order amongst the IT basket?
Possible, because generally I think the commentary in terms of outlook has not been very bright, very good, despite of course results have been reasonably all right. But I think generally the outlook seems to be, whether it is in terms of the hiring numbers, whether it is in terms of general commentary on IT spend by the customers, the commentary doesn't seem to be very enthusiastic as far as the potential for further upgrades is concerned. But I think there is a possibility of a rejigging of the order. But generally, I think structurally it looks like as if the IT companies in India are heading for some sort of a downgrade. All those premium valuations that were sort of probably justified when they're growing at 25-30%, I think that needs to be revisited, and we are seeing the first signs of that happening with Infosys, and we don't know how the others are going to fare after the results.
So, Mr. Bhatt, for the fiscal year FY12, benchmark indices were down by about 9%, approximately 10%. Do you think for this fiscal we are likely to lose more, or by the end of FY13 we could regain much more than what we lost for FY12?
I think two things. One is the way the drama is going to play out in Europe. That is very important, because we have Spain having initial problems in terms of the fiscal problems they have. The 10-year gilt there is nudging the 6% mark. Plus also I think we have very important elections there, Greece and France, and yesterday itself you must have seen some sort of initial reactions about Sarkozy's re-election prospects. So therefore, if say for example Sarkozy doesn't get re-elected, I think all that sort of near consensus that was sort of hammered down in Europe to solve the problems there, that might get revisited, because the socialists come to power in France. I think there's a huge risk there. So I think all these things are going to add up, and so therefore that would sort of influence FII flows, which of course have a very important bearing on the market direction. Plus also, unless we have some sort of a solution to this issue regarding taxation of FIIs, there could be further problems. So these are the macro issues that will probably influence market direction. But domestically, I think something dramatic needs to be done in terms of pushing the investments that are already on the ground, whether it is in power, whether it is in ports, whether it is in roads, or all these things are getting held up because of small issues that need to be sorted out, whether it is sort of recasting electricity board finances, whether it is resources, whether it is electricity tariffs being increased. All these issues need to be addressed by some sort of nudge from the government, and that is what I think the market is waiting for. If all these things fall in place, there is a possibility that the market can do well, but the possibility of something not falling in place is reasonably strong.
Mr. Bhatt, I was just coming to that point that you were making about power. While the government doesn't seem to be doing anything for any other sector, but power seems pretty active and up on their radar, power companies can now raise funds via overseas bond sales to refinance, say, 40% of their rupee loans. That is what the finance ministry indicated yesterday. Do you think this could dramatically change the financial health of some of these companies?
Well, today we have a situation where the exposure of domestic banks to the power sector are on the verge of becoming non-performing assets. So therefore, that is largely because of the environment and is not being conducive, whether, as I said, in terms of resources or whether in terms of paying for power sold to the electricity boards. So given that situation, I think this is really putting the cart before the horse, as it were, because if the domestic lenders are not very happy lending to the power sector because of the environmental issues, it's very unlikely that foreign investors are going to stand in a queue and start lending to these people. While in terms of policy, well, that is a step forward, but I think it is important to make the environment conducive for lenders to get interested in the sector. I think that's where we have probably not done enough.
What are your thoughts on capital goods stocks, machinery stocks? Do you think those sectors could start the year a bit soft, which means for next 2 quarters, for next 3 quarters, we may not see too much of price action in a L&T and a BHEL or maybe a JP Associates, but by the time we wrap out of the fiscal FY13, we could see some price appreciation there because of high government spending?
Well, it's contingent on policy initiatives finally, because as you have seen the CMI data that has come just the other day, it looks like as if investment is actually going soft. I mean, entrepreneurs are not investing as much as they used to. There's quite a dramatic fall in intentions to invest. So that is the sort of basis on which you can take a call on capital goods, because they service, they cater to that market where entrepreneurs invest in capacity creation. If that is not going to be the case, I think it's going to be difficult for them. But we have to be sanguine about potential action which might sort out these issues. So I think probably in 6 months from now, if the government comes out with the decisions which will help entrepreneurs to take this view about new investments, I think things can improve. But as of now, it doesn't look like as if that's a great destination for money.
Really sounding bearish to me, Mr. Bhatt. So at a time when you're cautious and when you're bearish, what's been your portfolio strategy? Are you sitting on cash? Are you short?
Well, generally, I think institutional investors need to be invested in the market because that is a mandate they have. So the only thing one could do is sort of cover the risk by buying protection when things are not going well. But the option of keeping large amounts of cash is not really there for institutional investors whose mandate is to invest in Indian stocks.
What is the downside you're betting on? 4,800 on the Nifty, 4,700 on the Nifty, 4,600 on the Nifty?
Well, it all depends. I don't think one can make a prediction as far as that. But the point is that one has to keep a close watch on which way the finance bill is going to be modified, amended before getting converted into an act. We have to watch the space in Europe very, very closely about the French elections, about what's happening in Spain, and also government decisions which might facilitate investment. So all these things need to be watched very, very closely. But as of now, I think about 5,000 looks like a reasonable support point, as long as something dramatic doesn't happen in Europe or something dramatic doesn't happen in terms of decisions with the government. As long as these things are there, I think 5,000 seems to be a reasonable sort of base for this market.